where the investment made, the guarantee provided, and security given in terms of conditions granted all the loans advances and the nature of loans and the non-guarantees provided is not very prejudicial to the company's interest. In respect of the loans and advances nature of loans, whether the scheduled repayment of principals and payment of interest has been stipulated, whether the repayment repayment receipts are regular and bound. If the amount is overdue, the state the total amount of overdue is more than 90 days and whether the reasonable steps has been taken by the company for recovery of the principal amount. The company has guaranteed any loans advances to the nature of loans, either repayable on demand or without prejudice in terms of period of repayment. It would specify aggregate amount percentage that for total loan granted, aggregate amount of loans granted to promoters and related parties defined in the clause of section 76 of the section 2 of 76 comprehensive of the cooperative parties. The company is required to be registered until 45 1 year at the Reserve Bank of India 1934. If so, what is the registration is unpaid. Whether the company has conducted a non-banking financial housing finance activity through the valid certificate of registration for the Reserve Bank of India as per the Reserve Bank of India Act 1934. The company is a core investment company is defined in the regulation made by the Reserve Bank of India. If so, whether is continuing to fulfill the criteria of CIC and the same case of the company is expected unregistered CIC whether the continuous to fulfill such criteria. The groups are more than one CIC is part of the group. If yes, indicate the number of CIC in which part of the group. Paragraph 3. Students require reference guidance from CARA. During the year, company has made investment in provide any guarantee or securities or granted any loans, advances the nature of loans, securities are unsecured, the company's firms, limited liability partnership, or if other things if so. So in the applicability of India account standards on NBFC. As of Section Rule 414 of Companies Act, Rules for 15 is amended by the Companies Rules for 16. NBFCs are required to compare the Indian AAs. Accounting period beginning 1st April 2020, listed and unlisted NBFC have a net worth of 500 crores or more of holding subsidiary joint venture associate companies such as NBFCs and the home accounting period beginning from 1st April 2019, all the listed companies of NBFC, unlisted NBFC having a net worth of 250 crores or more, have but less than 500 crores of holding subsidiary joint ventures as an associate company, which is an all strong NBFCs. Net worth shall be calculated in accordance with the standalone financial statements of the NBFCs as on 31st March 2016 or the first audited financial statement of the accounting period which ends after that date. Format and preparation of financial statement by and for NBFC and other entities. The Ministry of Corporate Affairs is notified for dated October 2011 to 2018 introduced an Division 3 division of the Schedule 3 of Companies Act 13 wherein the format of preparing financial statement by NBFC competing with the NDAs has been prescribed. Every NBFC required to complete the NDA shall prepare the financial statement as per the following format. Illustrative format. Assets figures at the end of the current reporting year and figures on the end of the previous reporting year. Asset financial asset cash and cash equivalent bank balances other than above derivative financial instruments receivable trade receivable other receivables loans investments other financial assets non-financial assets inventories current tax asset net deferred tax asset net investment in property biological asset other than the PL plants property plants equipment capital work in progress intangible assets other development goodwill other intangible assets other than non-financial assets to be specific. Liability and equity, liability, financial liability, derivative financial instruments, payable, trade payables, total outstanding dues of micro enterprises or small enterprises, total outstanding dues of creditors other than micro enterprises or small enterprises, other payables, total outstanding dues of micro enterprises or small enterprises, total outstanding dues of creditors other than the micro enterprises and small enterprises, debit securities, borrowings other than debt securities, deposits, subordinated liabilities, other financial liability to be specified. Non-financial liability, the current tax liability net provisions, deferred tax liability net, other financial liability to be said, non-financial capital, equity share capital, other capital is the total, it's the liability. Illustrative format of presenting profit and loss account prescribed in the Schedule 3 of Schedule Division 3 of Schedule 3. Revenue from operation, interest income, dividend income, rental income, fee and commission income, net gain on fair value changes, net gain on derecognition of financial instrument under the amortized category, Sale of property including excise duty, sale of services, others to be specified, total revenue from operation. Other income to be specified to total income, expenses, financial costs, fees and commission expenses, and net loss and fair value changes. Net loss on derecognition of financial instruments under the amortized category, impairment of financial instrument, cost of material consumed, purchase and stock in trade, changes in inventory, finished goods and stock in trade, work in progress, employee benefit expenses, and depends on depreciation, amortization, impairment, other loss expenses. Profit and loss before the exceptional items of tax, exceptional items, profit and loss after tax. Tax expenses, current tax, deferred tax, profit and loss of period for continuing operation, profit and loss of the period for discontinued operation, total expenses for discontinued operation, profit and loss of period for discontinued operation after tax, profit and loss of the period after comprehensive income. The items that will not be reclassified to profit and loss account, specific items related to the items that will not be reclassified to profit and loss items that will be reclassified to profit and loss account, specified account. Item tax, income tax are related to the items that will be classified to profit and loss account. Other comprehensive income, total comprehensive income for the period comprising profit and loss on comprehensive income, earning per equity share, continuous operation, basic value, earning per equity shares and discontinued operation, basic value, earning per equity share, continuing and discontinued operation, value. So let me refer illustration of statements. Difference between the Division 2 NDAs other than NBFC and Division 3 of NDAs NBFC delivery. The presentation of requirement of Division 3 NBFC is similar to the Division 2 to larger extent concept of NBFC have been allowed to present the items of the balance sheet in order to the liquidity, which is not allowed to companies required to follow Division 2. And NBFC is required to separate disclosure with note that any items, other income or other expenditure that exceeds 1% of total income. The Division 2 of other hands require disclosure for any items of income or expenditure exceed 1% of the revenues for the operation of 10 lakhs, which is NBFC is required to separate disclosure under receivables, the debts due from any liability partnership and which director is a partner member. NBFC is also required to disclose items comprehensive revenue from operation, other comprehensive income in the face of statement of profit and loss instead of showing those only in the part of notes. Separate disclosure of trade receivable which has been significant increase in credit risk or credit impairment. The conditional restriction of distribution attached to statutory reserves has been separately disclosed on the note stipulated by the relevant date. Just to understand.